Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Marc Bautis. On today's show, I'm joined by a special guest, Andrew Einhorn, co-founder and CEO of Levelfields. In the face of unprecedented market volatility prompted by the 2020 pandemic, institutional investors seized opportunities through insightful pattern recognition, reaping significant profits. Andrew recognized the potential of AI in democratizing access to these valuable insights. Leveraging his expertise in information architecture, data science, and strategic communications, he spearheaded the development of the first AI event intelligence platform. This platform can not only uncover, but also forecast the impact of events on stocks, empowering investors of all backgrounds. Andrew, welcome to the show.
Thanks for having me, Marc. Appreciate it.
AI is in the news. It's prevalent. People are interested in it. Can you explain just what Levelfields is, including how it combines AI and investing?
So in the plainest English, I would say we solve the problem of trying to monitor the market at scale while being one person. If you're not Goldman Sachs or a hedge fund with 200 analysts, it's very hard, if not impossible, to keep track of 6,300 stocks traded on the New York Stock Exchange and the NASDAQ. With AI, that actually becomes possible for the first time, and that's what we're doing. We're allowing our AI to track everything that's happening in the market, every event. So what do we do with that? Well, we've all been in a situation where some event happened to a stock that we owned or maybe wanted to own. We see the news headline, it sounds really bad, so we get out of our position, and then it's up the next day. And we go, oh man, I blew it. I lost money on that one. And so what we do is we provide analytics that showcase how that event normally impacts stocks. So when Jeff Bezos leaves Amazon, people don't flee their position in Amazon and then, regret it afterwards if the stock goes on a run. We can show that, hey, when a CEO leaves a company of that size, usually there's a 2.5% move on the first day. And then a month later, it's right back to where it used to be, and under other conditions, you can start to look at it. So it's very much like a weather forecasting for stock events. So we can tell you, there's an 80% chance of rain, pack an umbrella and it's going to rain for 3 days straight, versus saying, here's the weather outlook for the next year. So the idea behind it is relatively simple. It's just trying to give people better analytics and understanding of what is moving the share price, why is it moving, and how does it typically move. And we can do that because behind the market are humans, and humans follow patterns, and we pick up on those patterns. When there's a bad headline, people sell. When there's a good headline, people buy. The question then becomes, how much is the stock going to move by? And where is it going to go from here? And so if you look at the market, generally, everything that happens in the market is driven by events. It could be the Fed raising rates. It could be a war breaking out in the Middle East, or it could be a company announcement. And so what we do is we're trying to do pattern recognition on those events. We aggregate them and we display them. There's no black box algorithm or anything. People can see them in plain sight. And you can see that stock with that price move and typically moves, this much for stocks like that. And so the idea is we're trying to take what large hedge funds do. These are hedge funds they're managing billions of dollars. They augment their strategies of long-term investing with event-driven trading. Right? They see an opportunity, they do a short-term trade, could be a day trade or could be, a 6-month trade, but it's based on events. The most famous one was, Bill Ackman shorting the stock market in 2020 when COVID first came and made $2 billion plus in a month, on an event-driven trade. And there's many event-driven strategies, could be merger arbitrage and others, M&A, earnings. We've all kind of seen this environment, but there's never been a system to actually allow you to track it, analyze it, and see it in a way that you could with, let's say, using our weather example, a weather report. Here's the chance of rain. It's going to rain this much, this many inches it's going to be this bad. And we can do that just like a weather map all over the country. But our country is stocks, and those stocks happen to be based wherever. It could be North America, it could be Europe. What we're trying to do is really just to give investors one kind of a better understanding of what normally happens. Because unless you've been working on Wall Street for 20 years, you're not going to know, how a lot of these events are going to impact the shares. We make that very easy to understand. So that's a nice educational component to the site. And then the second thing we do is we allow people to discover new stocks, new trades instantaneously. You can log into the system, set a couple alerts up and say, here's a strategy I like. Every time there's an activist investor that comes in, let me know. Because I see from the platform that typically those are, 10% returns over the next 10 business days. Unfortunately, we live in a world now where information is so pervasive. It's easy to get information. The problem is there's too much information. It's coming from everywhere, coming from the companies, coming from the news. We're getting it from Twitter, X, whatever. We're getting it from friends, newsletters, opinion sites. So how do you sort through all that in a way that makes sense? And that's where most investors have the biggest problem. And so we find that, we talk to people, most average investors can name like 20, 30 stocks at most. They can track about the same amount, and everybody kind of buys the same ones, the Teslas, Nvidias, Microsoft, Apples. But if you really want to make money in the market, you have to find those sort of underlying bull markets and industries that nobody really knows about. You have to find the run on fertilizer companies because the price of, sodium potash is going up due to the war in Ukraine, and those companies are crushing it while the market's selling off in 2022. So how do you locate that? And when you have an AI system that's constantly looking for events, and we're looking for certain types of events that are prone to move the share price, you can start to see those patterns. For example, in that Ukraine example I was giving, we started seeing stocks show up in the system that were increasing their dividends and doing stock buybacks by huge amounts. And I'd never heard of any of these stocks. They were fertilizer companies, not an industry I'd ever really invested in. I'm a tech person, so I sort of stay in my lane. And I'm looking at them going, why are they crushing earnings? Why are they having monster buybacks? What is going on? And there was multiple companies, in the industry. And so I just used that as a starting point, did a quick search for what they provide, and then saw that there was a huge spike in, sodium potash, this type of fertilizer, a third of which comes out of like the Ukraine, Russia area that could no longer come out because of the war. So what was happening was American companies who were producing this could just raise the price and do nothing else other than raise the price because of supply and demand. And so they were all of a sudden pouring in all of this cash. And so what do they do with all the cash? They reward the shareholders. When they reward the shareholders, when they do buybacks, the stock price goes up. So in the time span of, a month, these stock prices were going up 30%. And if you're doing, straight equity trades, making 30% in a month, annualize that, and you're better than, every investor, including Warren Buffett on the planet. If you're trading options, that 30% gain is like 300%. And so those are the types of opportunities, the system can find and discover just by looking at all the stocks, not just the ones that CNBC, and the other big networks want us to pay attention to, the ones that draw in the headlines that Tesla did this and Elon did that. And, it pays for good clicks, but it doesn't necessarily make for a good investing strategy.
One of the things I'll hear a lot from people is like a company will have a good earnings quarter. They'll release their information, and then that's their trigger point to say, oh, I want to buy. And you look, and a lot of that good earnings already gets priced in to it. So how is the predictive nature of AI work in terms of, and you mentioned like stock buybacks, but is there a way that it looks and it says, well, when a company announces a stock buyback or does a stock buyback, its price, goes up in 30 days? Or how does it somehow try and get ahead of some of this information or that's out there?
Well, so there's two parts to that answer. The first is, if you're doing an event, we look at historical events and how they have affected stocks in a particular sector or industry, and then you're shown an average, right? On average, stocks move 3% over this period of time. Oftentimes that's day one. Day two, you would see a sell-off. People take the gains, and then we can show kind of an array. And the further out you go, the less you have a strong correlation with one event, because there's always something else going on. And so that allows you to say, all right, this buyback just happened. What should I do? Is it good, bad? Like, how should I react? And you could look, and the stock might already be up 10%. And if the average buyback is driving up 6%, then you would actually know, it's too late for me to get in. Like, I saw this too late. That is equally valuable, if not sometimes more valuable, than trying to make a trade out of it. And I've seen a lot of like money get wasted chasing that top. And this happened with a friend of mine at GameStop when that whole fiasco, came about. And he told me he went in when the price hit like 380. And I just lost my mind. I was like, what? Why would you do that? Why wouldn't you call me? I would have told you that 10x is your average short squeeze. They were at 20x. Don't come in, because mathematically, it's like the odds are stacked against you, right? It's like going to the blackjack table and every single 10 and Royal has already been played. You're probably not going to get blackjack. So, knowing when not to do something is equally important. And so what we have is some of our users will look at that and say, okay, it's way past where it's supposed to. And they run the opposite strategy on it. They short it, or they run puts, call options, or they just wait till it calms down, which it usually does. There's always kind of a reversion, and like eventually it makes its way to that average. But the stocks will go way past, sometimes on both ends. First it overbought, and then everybody tries to lock in their game, so it gets oversold. It's that second moment when it's oversold. That's kind of your spot. And if you have that analytics and look, this is supposed to be 6%. It's not supposed to be 12%. I'm going to wait. You're going to have that kind of discipline and entry and exit. And the larger, obviously, your portfolio, the more that's going to impact you. But, if you just made an extra 1% a week, that's 52%, a year. You don't have to have huge gains. And so, a lot of this is kind of bucking the whole mentality of buy and hold is the only way to invest. Because it's been proven untrue time and time again. If you've got an unlimited timeline, that's true, but very few people have the opportunity to never want to touch their money or need it, to buy that house or that car or, college tuition or whatever. Like, you're going to have to access it. So you can't just lock it up for 20 years and say, well, we'll see what happens. And we've had long swaths in the market where, the S&P did nothing for 8 years. It was flat. Or if you go back in time and you see the price of GE today is lower than it was 25 years ago when it was head of the pack of, the S&P 500. So like the buy and hold mentality was, in my view, kind of put in place by the banks, by the brokers, so that they could lend out your shares to the hedge funds and others who are shorting and make money off your money sitting there. When it doesn't sit there, they can't make money off of it. And so that kind of mantra, that kind of like false narrative has been planted in our minds for so long to keep us still, to keep the market kind of on an even keel. When in fact, all the hedge funds are running algos and they're doing event-driven strategies and they're making money while our money is kind of sitting there. I say our money, like kind of self-directed retail investors. Not you and I, we're not in any business that I know. And so, what we're trying is kind of like level that playing field to show people, hey, this is how the game is played. These are the events that move the needle. You can use that as a strategy, or you can simply use it to save some time doing some research, right? When you pull up a stock, you don't have to read through all their 10Ks and 10Qs. We sort of summarize like the main events that have happened. And if you've ever had the experience of using a stock screener and you find that really juicy dividend, it's like, wow, why does this stock have a 12% dividend or 8% dividend? Oh my God, that looks amazing, right? And then you look at the stock chart and the stock's down 75%. And so you're like,
that all the time,
right? Like something doesn't add up here. Why are we straight downhill and raising our dividend? And you kind of see that, stuff like AT&T where the business has sort of been flat and they keep the dividend and the stock price is going down. And it's kind of a joke that you want to stay in for a dividend stock like that because it's going down 12% a year, while paying you 8%. You're losing money, you're not gaining money. And so we try to avoid that. Say, look, you can shop for events the way you can shop for flights.
Going back to your weather analogy,
Mhm.
let's say I'm interested in Apple stock, and let's say the Fed is meeting next week or a couple weeks to discuss whether rates are going to go up or not. Will I be able to kind of see or visualize through the app, this is what's going to happen, or this is what potentially could happen if the Fed does raise rates to Apple stock?
In the future, yes. Today, no. That's sort of the macro to micro view that we want to build in. We're right now focused more on what the companies are doing themselves. They're making announcements. If Apple has a product launch and let's say there's some big announcement for the next iPhone 15 coming, you could go to the system and see, what are the last 15 launches look like? How did that impact the share price? And, the same with Tesla. And so there's a good number of traders that want this as their strategy. Think, oh, wow, Apple's going to come out with a new iPhone. It's going to be a game changer. The stock price is going to go gangbusters. Boom, I'm in, right? And then nothing. It falls flat. In fact, often sells off. So you could go to our system before an event like that, look at how the analytics are for the last events in like one click, and say, you know what, it's like 50-50, whether it goes up or down. If it goes up, it's only going up on average 1%. If it goes down, on average, it's going down 3%. That's not good. I'm going to stay away from this one, right? Or if you are a more kind of seasoned trader, you might be looking at a more elaborate options strategy for something like that. So we're focused right now more on those like micro events, like what's happening with the company. The company's announced a huge new contract. There's clinical trials for rare diseases like Alzheimer's. When there's progress towards a cure or therapy, there's these sort of events that are government initiated. So sometimes DOJ investigation, other times it's more positive on the other end, where a company is getting some particular approval from the FDA, which is like a breakthrough therapy approval. So that is telling the world, hey, there isn't a cure for this, there isn't a really good therapy. This company actually has something that's really effective and really promising. They're only in early stages, but we're going to grant them like fast track access because this is so important to get out there. It's a breakthrough. When they get that designation, there's usually a little bit of a bump, but there's also the opportunity to kind of come in early, right, before it hits a commercial market. And then over the next 2, 3, 4 years becomes a $20 billion drug. So it really kind of depends on how you want to look at the system and use it. And what we have is 24 different strategies, that are kind of off the shelf that you could go in, and each strategy is just a type of event. So if my strategy is, at every time, there's a stock buyback, I'm going to trade that, or I'm going to look for really outsized ones. And that's all I care about. I can do that. Other people, might use it for something like CEO departures, right? Morgan Stanley CEO left this morning. Stock price usually falls a little bit. For a big company like that, not that big a deal. But if you filter the information, and you could set our AI to be customized, right? So you can say, I'm not just looking for CEO departures. I want CEO departures from small cap companies, that have a really terrible track record financially, right? Because when that happens, all the investors celebrate like, hey, we got rid of this person. Like, it's great. Finally, it was a zombie company, and kind of hope arises, right, as the new CEO comes in. And those moves they're huge. They're 10, 20% in a day. We've seen 30% swings in a day. And then it can also be the beginning, of a turnaround story, depending on who comes in. So Bob Iger comes into Disney. What normally happens, a poor performing CEO leaves, a CEO like Bob Iger with a good track record comes in, the stock went up. Our system can show how that normally happens. The fight with, Florida governor and all that aside, that comes later, but we'll get into the politics of that.
And so as a user, I'm able to, like, for the example, that CEO change, I can basically subscribe to that strategy, and I can look daily, I guess, and see, did anything hit that strategy? And I guess then decide whether I want to actually execute on that or not.
That's right. Yeah, you don't even have to go to the application more than once. So you go to the application and you can set an alert, which is just as simple as saying alert, click one button, alert me when these events happen. If you want, you can customize that and say, you know what, I like this event type, but I only want it for small caps with no earnings. Set an alert. Don't have to go to the app again. You're just going to get that alert through email. And it's basically an AI search agent just looking for that particular type of scenario with that particular type of company. And in that case, it's like a very, it's an AI Google News alert effectively that you can really customize to the size and shape of the company. We have all the usual filters and metrics that you would see in like a Yahoo Finance type site. We want to say something that you could do the opposite, say I'm only interested in companies with good revenue growth and high earnings growth, large caps that do this type of event. You could put in your watch list of companies that you want to track and set those AI agents loose to look for certain types of events just for that basket of companies. So it could be your own portfolio, or it could be companies you want to buy or interested in buying, but it's a little pricey, right? Like you might say like NVIDIA, Tesla, take a basket of those companies that are great companies, but maybe a little overpriced. And you could set alerts for kind of negative events and wait. So when you get the alert, okay, negative event has happened. That's my chance to buy in, because it's on a sale, on a discount. Now I can come in. And you did that, and it took you 2 seconds. You don't have to watch the market every day. You don't have to read the news every day. It's doing it for you. And so that is a lot of the efficiency that our AI is creating. It's reading 30,000 documents per minute, looking for events. Then once it finds the events, it's looking for particular events that we tell it are interesting, or in other cases that has been proven to kind of move the share price. And then it's just always doing that. And so it's your like AI speed reader that's going through the market data for you.
And you mentioned, I think there was like 24 off the shelf strategies. How do you come up with new ones?
Well, some of them are based upon like fairly old, well-documented academic studies. So you have a lot of these guys in universities that study event types and how they move markets, and they put out research papers. And that's oftentimes what is driving some of the event-driven strategies at hedge funds. And so that's widely available. The difference with us is we're just automating it. We don't have to do it in Excel. We can just put the information in, and then instantly all the events are collected. All the analytics are analyzed. The aggregate averages are displayed right on the platform. So there's no need to spreadsheet it out, create your hypothesis, figure out if it works, crunch the numbers, redo the model, update it with new information. It's all automated. So even if we have like sometimes on a weekend, I might have an idea and say, I wonder if this holds true. And we can throw that in our kind of test application. I think that, I don't know, whenever SpaceX rocket lands successfully, Tesla's price goes up. Like we can test those hypotheses relatively quickly with the system. And so it's a combination of looking for kind of tried and true events that are proven to move share prices, and others where we've kind of seen the patterns or understand it, or our advisors are sort of telling us, hey, this, when I worked at Wall Street, for 20 years, like this is all I did. I looked for distressed assets, and companies that were engaged in an asset sale, and you can set it to look for those particular types of events. So it's really limitless what we can add. This is our starting point. We launched a year ago, after long beta test, and we've been kind of making sure the AI can process all the data, because there's a lot of information, and trying to get a lot of user feedback to see how exactly people want to use this type of information. And we've been kind of amazed at the wide array of use cases that our users have found. Some are very advanced options traders, and they love it because they can see exactly which way, the numbers are going to go, and they could be selling puts and buying calls simultaneously. Others they've never done any trading in their life. They've never even done any real investing. They got on Robinhood, 2 years ago during the pandemic, clicked buy for a couple stocks, realized in 2022 stocks don't always go up, and then kind of came and said, all right, I need a little bit better strategy. What else can I do here? I don't want to become a fundamental analysis professional and spend the next 2 years learning, everything about the stock market. Like, can I get something that's a little easier? And they're finding that it's easier because they can just focus on one type of event. And you say, look, this type of event moves the share price this way. If you look for that type of event over and over and over again, you have a strategy. You don't have to really do much else. Over time, we'll get it more sophisticated, more event types, enable people to do combinations of events, integrate it with some projections. So that was the second part of your question, where as you're leading into an event, like an earnings announcement, there are changes in prices called drift. So when that sort of price starts to price in a positive outcome. And that's more of just mathematical equation to sort of figure out on average, if we're looking at a stock like Visa I've owned myself since IPO. I see this every time. I've traded on this. The Visa has a very, very specific pattern of every time it's 2 weeks out of earnings, price starts to move up. Whether it sells off or not, it depends how much it blasts the estimates, but it almost always moves up in preparation for earnings. And that by itself is a gain sometimes of, let's say 4 to 6% on average. 4 times a year that's occurring. So that's 16% plus return just looking at that 2 week period. If you're like me and you own a core position, you can utilize that in different ways, which I can get into or not on the option side. But that's more of just quantitative information. What we're doing mostly right now is a lot of the qualitative analysis, right? Reading through all the text, press releases, sometimes tweets, reports, news, things that have little tidbits of information, sometimes buried deep into a press release. A company might be talking about their product pipeline, and then they hide a little tidbit at the bottom that say that, we're considering, cutting our dividend next year. Right. And so you're like, whoa, okay. You would necessarily catch that as an investor unless some reporter caught it for you, put it in a headline, and you happen to read that exact publication, which is getting harder and harder right now because, everybody's charging subscriptions for their particular periodical or news. So how do you find that? How do you make sure you don't miss that? And that's what the AI is doing. It's like, oh, sorry, I don't care what the headline says. Down here at the bottom where you tried to bury it, it says you're going to cut the dividend, right? And the analysts pick up on that because they paid to sit there and look at those types of reports. But for the average person who's got a day job, we can't do that. We don't have time. And that's what the AI is really useful for. It's like finding those things that there was, sort of joke of like the day, you wake up in the morning and you look at the price of your stock and it's down 10% and you have no idea why. We're trying to solve for some of that problem too and give you that heads up like, well, it's down 10% because, overnight they made an announcement that they were, cutting operations in China or, cutting their dividend, whatever the case may be. So it's becoming a lot more transparent, what's happening in the market. And I think the AI is leading the way, and we're the only solution out there that's doing like very specific event-driven work to try to cut through all of this information and give everybody, an equal chance to keep up with the data flow, to find those really cool, interesting investments, those companies that you would never hear about otherwise because they're not touted in the news. They don't really have analysts covering them. They just kind of fall under the radar, and there's thousands of them. One example I can give you, my favorite. So it's March 2020, stock market's selling off from COVID. Everything is crashing. Energy companies are slashing their dividends. Everybody's going to cash because we're afraid, this pandemic is going to take over the planet. And then there's one company that's buying back its stock. And you're looking at it like, what company on the planet was buying back stock, taking their cash and spending it just to buy their share price when everybody else was worried about going out of business. And it's a company called Veritiv. And what they do is they design and make packaging for direct-to-consumer products. So none of us could shop. The world was going under lockdown. We couldn't get to the stores. Every business on the planet had to figure out how to ship something directly to your door. And they were designing the packaging from the outside in to enable that to happen. And so for them, this was boom time. Like this was a monumental tailwind that they got, that all of a sudden all these customers came to them and said, I can't sell my product through Target anymore. I got to figure out how to package it and get it delivered to somebody. Can you help me? And so they architect it, they engineer it, they ship it out. And this company, they were so confident and they were in the cash flow that they were able to do a buyback at that time. And that is sort of a red, huge like flag that they're flying. And if you read the data right, you say, wow, that is a really unusual thing to do in the middle of a worldwide, crisis. I wonder why that is. And it takes 2 seconds and you read it and you realize, so they do the very thing that every company in the world needs right now. And they went on to be up 1,000% over the next 2 years.
How did you come up with the idea for the company? Did you work at a hedge fund at one point and kind of were doing some of this stuff manually or with spreadsheets?
It's a combination of things. So my previous company, we did event and reputation monitoring for publicly traded companies largely. It was, a lot of media monitoring. It was clients like CSX, Discover, ExxonMobil, all the big ones. And our job was to find these events that would happen for them, flag it, send it to the corporate communications officers who would then spin up their press releases and talking points on how to react to that event. For example, one client was, a train company, and if the train derailed, it was often a lag time between the train derailing and the executives hearing about the train derailment. And so we sort of fulfilled that lag time by finding the event very quickly, flagging it, and the software would send it over to the corporate execs. Sometimes it was 2 a.m. and they'd have to get out of bed, start addressing the press, started getting ahead of the issue and saying things like, well, it wasn't our fault. It was the maker of the tracks, or, it was the oil company who overloaded it, they overweighted it, and that's why it fell over. Whatever it was, that was on the negative side. Sometimes it was positive, it was a product launch. And so we did that for 10 years. And we charged anywhere from $30,000 to $150,000 a year per contract to do these types of things. But we saw the same patterns because the events would happen again and again and again. There was data breach, or train derailment, 20 a year. We started to see these patterns and kind of said, a few times we're catching some of these events so fast, sending it over to the company, and they're saving sometimes billions of dollars in market cap by getting ahead of the issue, coming out with good information, avoiding a massive sell-off of the share price. And so we kind of joked internally, like, we're saving them billions, but we're getting, thousands. Maybe we're on the wrong side of this issue. Maybe there's another way we can use this for investing purposes, right? And it was always kind of just one of those ideas that kind of was in the back burner for years. And it never really came to fruition. There was a time where I was brought in to be an advisor for a hedge fund. And so I met one of the portfolio managers, who saw what we were doing, thought it was amazing, said, could you help me out? Show me kind of the information gathering process. Like, how do you make decisions? How do you find this stuff so rapidly? And so I worked with a hedge fund for maybe a year, kind of helping them understand just how to find real-time information from the source, using some of our methodologies. And so in that process, I was learning also like how the hedge fund worked. How do the investors find investments? How are they doing trades? And I found it largely, kind of older school, looking through Bloomberg news feeds. Everybody was kind of on their own to find trade ideas. There was not a lot of camaraderie or teams. It was like a room of 200 people, dead quiet, just lots of monitors around, and people were scrolling through news feeds. And so I asked for a favor, can I see some other trading houses? And so sort of, exchange of services. It was introduced me around to other trading houses. And in one, which must have had, I want to say 300 people working, they actually had like a box, like a squawk box, like in the middle, just on its own. And there was a person on there just reading tweets out loud. And I'm like, what is with this? Why is this person reading tweets? And why don't you just have a Twitter feed through your, and they're like, well, we can't do that because we're so highly regulated. Twitter's not allowed in our building. So they just read the most trending tweets of the day in this monotone voice. And I'm cracking up. I'm like, well, what about your cell phone? Now you can't have cell phones in here. They're worried about, market manipulation. I'm like, wow, this stuff is like decades behind where the rest of the world was. So it started giving me ideas of like, maybe, for some of the hedge funds were more advanced and obviously had more money and they could do these algos and they had developed some of that, but most of them didn't. And I also saw this sort of process of like, well, if it's taking them so long to find information, it's also taking us so long, but we don't have rooms full of people monitoring stocks on our behalf. So I started to think like the idea was viable. And at the same time, we were so busy as a company, we just couldn't do anything. We couldn't really pivot. We were just, kind of doing well. The company was growing fast, but we just didn't have the resources to do two different businesses, one for financial services, one not. So we started to look for capital. And in that process, we were talking to a private equity firm, it was growth equity, and they were going to put in a lot of money and they wanted to combine us with another company. And so it became like a whole headache. We went to our board and said, well, what are we going to want to do? We've got the opportunity to build this sort of other idea and maybe do it in financial services or not. And the board was like, well, what if you just sold the company instead of, diluted yourselves? And so we had to look at that and ended up getting an offer, took the offer, sold the company. And the core technical team and the product team left, post acquisition. And we kind of took a little bit of a breather and had a bunch of different ideas swirling about what the next thing was going to be. We knew we wanted to do something with AI because we knew the limitations that we were reaching with like Boolean searches and things of that nature from the previous business. And so we started talking about all these different ideas that kind of had emerged during the last 10 years that clients had brought up. We started talking about self-populating databases using AI to do it. We're kind of working through that as the solution set. And that was the end of like 2019. And we were still kind of brainstorming and poking around. And then COVID hit, February 2020. And the markets started to sell off. I was getting calls, panic calls from family members. My father's in retirement. He was worried that all of it was going to be just burned by this event. Brothers, cousins who were having equal concerns about tuition savings for their kids and whether that was going to be there. And there was this just dark, negative view that we were going into a depression from this, that, you got to put the money in your mattress, get it out of the market. And it was so burning of an idea. And I was one of the few people that I think was in a startup mindset. So I locked myself in my office for about 80 hours. I don't think I slept, just a lot of coffee. And, my background is actually as an epidemiologist. So I researched all the last pandemics that we had and then matched those to how the markets have reacted in each of the pandemics and epidemics and started to figure out there was these patterns of how the government reacted, how the vaccines were developed, of how the markets reacted. And I came out and I had like hair on fire and, I hadn't showered in 3 days. It was like, in 6 months, the market's going to be right back to where it was. And I was telling people that, and they were like, you're an idiot. You're dreaming. I don't know where you get that. What are you smoking? I'm like, no, that's what the data is showing me. And I'm like, and we'll have a vaccine, looks like within 13, 14 months. So from that idea was, why should this take me 80 hours? And I wouldn't call myself an expert at this, but like as an epidemiologist who was studying events and markets for a long time and have been trading since I was 14, like it took a lot of effort to put that together. And the view was, it shouldn't be this hard. We should have this information more easily accessible. events drive all the price movements. Why don't we take the AI that we've developed and use it to identify and predict the outcome of events? And that was like the aha. And so we looked at, what we wanted to do, and then we looked at it from a business point of view. And from a business point of view, we said, well, let's start with company events. There's a lot of them. It'd be better for training the system. And there'd be more data. And so, that's when kind of the concept of Levelfields was born, right? It was like event-driven information, trying to level the playing field between the institutional investor and the individual investor, so that we all have access to the same kind of powerful technology and information. We all know how to react, and the information advantage isn't always skewed away from us. So we've been pushing on that since, and it took, 2.5 years to develop the first version of the AI to do this. And then it was a lot of like front end testing and trying to figure out like how people would interact with the app. And we're still through that process, it's still in an early stage of trying to identify exactly how an investor wants to interact with it. And so that's kind of the next step in our evolution is looking at adding some additional modules, more flexibility and things of that nature.
Interesting. It really kind of hits on how important data is and the processing of data, and then how AI can kind of be like the gasoline on top of it to actually make it useful.
That's right.
Yeah. Well, we're just about out of time. Andrew, I want to thank you for being on the show today. You gave some great insight. How best can listeners find out more about Levelfields or more about yourself?
Just go to levelfields.ai, levelfields.ai. It may not be the perfect trading system for you, but I guarantee you'll know somebody that it would be a good fit for. So, holidays are coming up. You can always give it as a present. And we've got a promo code if anyone wants to put in for a discount. It's podcast 23. So for podcast 23, you'll get a discount, and subscription is crazy cheap right now. It's only a couple $100 a year. So, to do that, it boils down to about 63 cents a day to have AI looking for the entire stock market for you.
Cool. We'll link to that in the show notes. Thanks again, Andrew. And thank you everyone who tuned in today. Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.